All right, everyone, let's go ahead and look at the stock market indices, see how the week wrapped up, and I'll point out a couple trade ideas or setups that I'm seeing start to set up. Usually when I point these out, they haven't moved yet, so there's still opportunity for all. Again, everything on this channel is just my opinion. So let's get right into it. If you're new to the channel and you want to learn how to use technical analysis to find setups and trade stocks, take the trading course. It's in the description below. It's $99 though, which is a good value if you feel like learning a skill set is a good thing to do. All right, getting right into it. We're going to start out here with the triple Qs, and you'll see really I'm honing in. I'm on the daily chart here, and you'll notice on Friday, which was a half day of trading, they popped it up into this kind of resistance area. Now, the key resistance that I saw is really right about here, 297.54. And if you go to the hourly, you can see we had some reactions right in there. We could move it up slightly. Maybe we could say it's about 298.30, but it's in that area. And on Friday, they just barely pop it up, and it's basically held in that area. I think this is a low probability area for the market to just move higher here. I think we're probably going to get some sort of a pullback Monday and fill this gap at least down to 297. But again, we'll have to watch. Bigger picture though, if you look at the bigger picture, going to the daily chart here, we have negative divergence right there. You see the momentum. Now the momentum has been turning up. So if we continue to move higher and momentum continues to build, it's going to burn through this divergence. But it is here as of right now, but we haven't made a new high. So what I would look for, here's the high right up here around 303.46. We're just, a stone throws away, a stone's throw away from that area. So if we pop that area just marginally, I'll just mark it out right up here. Make a slightly new high just above this area. That would be a divergent high according to this divergence down here. So look for that to pop and then look for the breakdown or the failure. That would be your sell signal, and that's what I'll be watching for. To get long at this point, I think makes no sense, at least from my perspective. I would not want to be long or getting long at this point in the market. To the downside, I think, is where there's more risk. And then just to show you where, if we're going to pull back, I think we could obviously come back down to this trend line, 269. I'm actually looking for a breakdown of that trend line and to head down to the bottom of this trend line around 230 or so, depending on when we get there. The S&P 500 on Friday didn't do much. Still, here's your resistance right here at this big breakdown candle. And you can see, let me get rid of this trend line right here. We basically closed right at it. So watch for whatever happens around this level, 364. It's about 364. Do we break down and sell off, or do we move higher? The RSI tells me we're going to break down. You can see divergence, negative divergence right here. And it has negative divergence right there. And all this price action up here has been divergent high. So that tells me that we're likely to fail and to move lower, although you need that sell signal or some sort of a breakdown. So we'll keep an eye on that for next week to see what plays out. If we move a little bit higher, we'll still have negative divergence, and we could do this. We could pop a little bit higher up to about 375 or so in the SPY. The RSI could run up and do something like this and then turn down, and we would still keep that negative divergence and run into major resistance. That resistance comes back to the 2009 trend line. Here's your weekly chart to kind of show that. Here's your 2009 lows. You walk up it, you were held support here, held support all through here. Then you broke, the trend was broke, and now we're in a topping kind of pattern. Broke trend, back test, Fed induced. Then we sold off again, back, coming up for another back test, Fed induced. So each one of these back tests, the Fed's been trying to keep the bull trend, even though the market has been trying to sell it. And you can see on the weekly chart here, there's your weekly negative divergence on the SPY 2. So negative divergence across the board in the major indices. We're coming up to major resistance. Maybe we don't get there. When all eyes are on a level, they'll either step in early and sell it, or it will overshoot. So we have to watch. I suspect we don't get there and it sells early. So again, I think we're near the highs of where this market is going to go. Could obviously go up another, up to 375 or even overshoot it, maybe another 3% or so. But close enough to be on the lookout for some major downside movement. Now, I don't think we're going to crash. I don't think it's going to be a plunge like this. That's pretty rare. I think a more steady kind of descent lower, where we start to just work our way lower over time, have little rallies, work our way lower. Then eventually when the masses realize that, this thing is continuing to trend lower, then you'll start to get kind of the swift moves down. Okay, so obviously I could be wrong, but that's what it looks like to me. Moving on, let's look at some trade ideas. Let's check out gold here. All right, gold. I've said over and over for the last month, many months basically, going back to August. It's been several months where I've talked about gold getting down to 1790, 1800. And on Friday, we basically closed at 1787. So, pretty much there. And undercut it slightly. You can see that we dipped below, but then the buyer stepped in and started to bid it up. And we closed basically right at that level, a couple dollars off, but pretty much right at that level where you would think we'll find some major support. Why will we find support? Well, here's your weekly chart. This is going back to 2011 to 13. This was major resistance back then during that bull market. That really capped the bull market. Yeah, you had a brief overshoot, but the multiple reactions validating this trend line as a major resistance line. And then we just broke, and then here when we broke above that, it was an impulsive breakout. So that's a breakout above major resistance. That's a buy signal. However, when you get major breakouts, oftentimes you'll come in for a back test, and that's what I was looking for, was a back test. When we started to sell off, you got this bearish engulfing on the weekly. That was a signal telling me that likely we're going to come in for a back test. Here's your back test right now. It's objective to go long gold in this area. Now, we could go lower, but I think prices down here are going to be bought up. One thing I'm looking for that we just don't quite have yet is bullish divergence on the daily. You can see here, if I mark this out and get rid of this line, we're not making, there's no bullish divergence, which tells me that we could go a little bit lower. Or another thing we could do is pop up, move higher here, get some sort of a reaction, because we fell right down to major support. So I think it's high probability that we get a bounce and get a reaction. Then maybe we come down and sell off a little bit more and undercut some of these lows down around 1790 again, putting in bullish divergence. So that's the setup. But again, I think it makes sense to be long gold in this area. It's had a nice correction. It's from the highs, it's off about 13%. So that's a correction. But again, I think gold is in a bull market. So a 13% drop in a bull market is pretty standard. The only thing that I would like to see is that bullish divergence. We don't quite have that yet. So again, the scenario I laid out, I think is probable. Here's Barrett Gold. So I'm long this one. And you can see here, I just got long the other day. And what I think is likely, we have this bullish falling wedge. So I think it's likely that we get a bounce, we break to the upside and get a move up to this first level of resistance, $24. That's a move from where we're at now of about, it's about 5-6%. So I think that's likely. We get that bounce. Then maybe we start to sell off again and put in kind of a marginal new low from this previous low where we're at right now, and create bullish divergence while doing so. That's just a setup, or I think that's likely. Doesn't mean it's going to happen, but that's kind of what I'm expecting to happen. You can see some of these other miners have already started to turn up. Here's Agnico Eagle, AEM. kind of, caught a bounce off this low here. FNV caught a nice bounce off the low there. So we're seeing that bounce, that initial reaction, or the buyer stepping into that major support of gold bullion. So I'd expect Barrick Gold to do the same. Let's take a quick look at the FANGs. These are very important to watch. They are the market leaders, and essentially they're kind of the market. Without the FANGs, if the FANGs have not been selling off, so the market has been rallying in other areas, and the market's been moving slightly higher. But if the FANGs decide to sell off, the market can't go higher without the FANGs. So we'll keep an eye on those. Even if other stocks and all the other areas are rallying, without the FANGs, if they're selling off, the market isn't going higher. You can see Apple really has gone nowhere. It's we've just been chopping around sideways. So ultimately, I'm looking for some sort of sign that this sideways action's over. I don't see it as of right now. We're just continuing to go sideways. Microsoft, same thing. Microsoft's gone sideways since July. You can see here it really hit the ceiling. Yeah, brief little pops over, but they've been sold. They're fleeting, they've been sold into. So Microsoft is hitting a ceiling right now, and it's not able to break out. So you have to wait for the next move, the next trend. It's either going to break higher or break lower. I suspect it goes lower, but again, we got to wait for that sign. Amazon, same thing. Possible head and shoulders topping pattern, and that's still intact here on Amazon. So we're going to continue to watch this. But again, it's just gone sideways since July, basically. And Google's the only one that's actually broke into the upside. That looks a lot more bullish. So Google is, definitely the more bullish stock. However, it does have negative divergence. Let me get rid of these trend lines, kind of clean this up. And you can see here Google is, it's starting to build negative divergence. Now, this would need to turn down soon in order to confirm this divergence. But look at the PPO. See the blue line crossing below the orange? So you have a bearish crossover. So we'll look for price action to continue lower to kind of confirm this negative divergence on the daily chart. Okay, here's one that I'm long in, Joe. I don't talk about it a lot, but again, it's a long trade. I've pointed out a couple times. And yeah, on Friday, up, up 5 and almost 6%. So this is continuing to uptrend, basically. We've had resistance right here at 35.32. Now, really, the next level of resistance that I have is all the way up here at 40.78. So I'm looking for that to continue higher. And from where we're at now, that's a move of about 10, 11%. Now, I got long this one back here on the breakout above this bullish falling wedge pattern. So here's your breakout signal right there. That was your buy signal. And you had bullish divergence. See it marked out? So I saw the bullish divergence. I noticed the bullish falling wedge pattern. You wait for the buy signal. There it is right there. And then you swing trade it and manage risk. So again, from the point of entry till about, potential target 27%. Another thing to notice, which is kind of interesting, if I roll back on the daily chart, you can see we made a lower low right here, but we're starting to make kind of higher lows. So if we break above this level, then we potentially have a new uptrend intact, because you can see we have a low here, higher low, we have a high. Now if you break above and put in a new higher high, then you're starting to build an uptrend. So there's potential for a longer term trade on this one if it wants to actually start creating a new bullish trend, instead of just sideways action that it's been in really since looks about 2019 or so. All right, PayPal. So here's PayPal. And again, I think this still looks like a great short. It looks like a good short to me. And here's the thing. You've got big negative divergence that's continued to build. All this price action, each one of these slightly new highs have been divergent highs on less and less momentum. So big negative divergence. I got resistance right here at about 213.22. If I scroll down to the hourly chart, you have a slight uptrend right here, which was just recently broken, not impulsively though. So I'd like to see some more impulsive sell-off price action, some sort of a gap down or something. But the negative divergence on the daily chart is there. Now I know there's some fundamental news out, some rumors out there about Warren Buffett buying PayPal and this and that. That's just headlines. That's just hype. Okay. Warren Buffett also was buying Barrick Gold. If you remember back when, if I show you the chart real quick, Warren Buffett was buying gold on Barrick when it was ripping up here to the upside. I think on this final move, ripping to the upside, this is when the headline came out that Warren Buffett was buying gold. Well, Barrick Gold's down 20% since that headline. So if you would have bought on that Warren Buffett news, you would have just been chopped sideways and then lost money. So it doesn't really matter that Warren Buffett is buying that there's a headline that he might buy PayPal. Just follow the charts. Rolling back to PayPal real quick, you can see we got rejected on Friday right here. We made a slight marginal high above this resistance, but then it sold off. So last week was kind of a mulligan week. You don't want to take the data from last week too seriously. You want to wait for this next following week when you have a full week. Institutional traders are back on the scene, and we'll see what they do. But so last week was just retail traders, and it's very thin volume. It's nothing that you want to take, believe breakouts or breakdowns fully. So just understand that. Draftkings continues to kind of work its way up this up channel, this upward price channel. Friday, we just were right at resistance, getting rejected. So I suspect we'll sell off and work our way down to the bottom of the price channel. We do have negative divergence here on the hourly. You can see right there. Let me get rid of this line. Negative divergence on the hourly chart. If I flip to the daily, we don't quite have it there on the daily. So the hourly potentially sets us up for a move down to the bottom of the price channel. We'll look for, what I would look for is maybe a sell-off and then a slight pop above the marginal new high, putting in negative divergence on the daily. We don't quite have it there yet. Qualcomm here, you can see we've gone nowhere. It gapped up. This is where we took the short. I got short right here at 147.70. I don't remember the exact price, but it was right against that resistance line. And we've basically gone nowhere since. So we're just waiting for the patterns to break down. We have negative divergence here on the daily, telling me that we're going to break down, and we just wait. You just wait for, the momentum is fading. That's what this negative divergence is telling you. So the buyers are starting to lose control. The momentum's starting to fade, and you just have to wait for that moment where the sellers overwhelm the buyers. It's happening. It's starting. We just have to wait for it. So that's what we're waiting for. BBY started to break down. I want to see what it does next week. This one's been tricky. We do have a breakdown. I drew another trend line right here, but these are the two trend lines I could really make on BBY. I got the one coming off here, off the April time frame, running up, and then this most recent one here off of July. We kind of created this trend line. We've broken them both. So we'll see, again, the price action took place on that half day on Friday, so it's not fully trusted. Let's see what next week brings. ExxonMobil. So I kept saying 41 was my price target. I took profit, and we're below that level now. So we're watching for this. Obviously, this could run higher. I could see this running all the way up to this 52 area. But again, when you have profit targets, I think it's important to take profit along the way as a trade's working out. It's important to take profit. And so that's why I mark out profit targets before I enter a trade, so that when I get to those areas, I take profit. It's very systematic. I don't have to think about it, and I don't get emotional. Zillow Group. This one's interesting for a short. You can see here coming off the April lows, you have an uptrend line. We broke trend right here, did a back test. It looks like they had a little fake out move right there, but sold off. And we're coming in, kind of for another back test. It's in the area, whether you get the full back test of the trend line or it breaks down, it's hard to say, but you do have negative divergence right there. There's your negative divergence. That was a divergent high. And if we make a new high, that would also be a divergent high. So again, that would be the best area to short this thing. It would be on a back test, a full back test. But if it doesn't get there, then we'll watch for some sort of a breakdown. On the hourly chart of this one, you could probably mark out this trend line right there. wait for a break of that. If you get a break of that, 109.70, depending on when you get there, of course, that might be the next, that might set this thing in motion. You've got a gap down here as well. Yep, you've got some major, you got some support down there at about 93.63. So there's a potential trade idea. If it breaks, a short down there is about 15%, 14.5. I like that one. And NEO here, this one is, you can see, continuing the negative divergence. It's cleanly intact. All this price action up here is divergent highs. We just need that sell signal. Here's your uptrend line on the daily chart. And if I go to the hourly, you can see that we've just been walking up this trend line, waiting for that sell signal, that break of trend line support. Once you get that break, that should impulsively set this thing to the downside, moving down to probably about this $30 area. Depending on when we actually get there, it could be higher depending on, if it wants to drift sideways before it breaks down. But that's what I'm watching for on this one. Okay, long video. That's all I got. I just want to point out a couple key things that I see for how the week closed out, and I'll catch you guys on the next one.